Hi, my name's Tom Blake. I am a certified residential specialist with RE/MAX Liberty, and I'm here with...
I'm Brieanna Kelley. I'm the branch manager of Annie Mac of Leominster.
And Brie is a very highly talented and qualified loan officer and broker, managing broker.
Oh, yeah.
At Annie Mac, and she is a really great go-to for all things mortgage. And one of the things that I run into pretty consistently everybody loves looking at Redfin, Zillow, and saying, boy, would I like to buy that house. Yes, I would. The fact of the matter is we can't really go looking for a house without knowing what you can afford. And I'm surprised by how many people don't understand that they need to get pre-approved for a mortgage before they go looking for a house, especially in this market.
Yes.
So I would like to ask you the basics of how to apply for a mortgage.
Absolutely.
So we're going to pretend I'm stupid, which is really easy for me, actually, as it turns out. So
Don't listen to him.
But no, I'm just gonna I'm gonna play dumb, right? And I'm gonna ask some questions and where to start. So and again, whether you're a first-time home buyer or whether you're re-entering the market, understanding the mortgage process is absolutely crucial. Would you agree?
I agree.
Okay, great. So let's talk about understanding where to start. So checking your credit score. So what would you do to check a credit score, and how can you do that on your own?
Okay, so there's a couple of things. I think that you have things like Credit Karma and other apps like that show that you have your credit score. Unfortunately, that is not your real credit score. That is actually something that they use their own algorithms to be able to produce what a score might look like. It has different ranges than what an actual credit score is, like they're 350 to 900, where credit bureaus are really 337 to 823. I know it sounds a little quirky, but typically there's different ranges within those scores. Plus, it actually doesn't have what the actual credit reports are using for your credit scores. So my recommendation is two things. I love those apps, regardless, even though your credit score is not right, to be able to track information on there, to see what is present, if there's any errors, which a substantial amount of credit reports do have errors. Sometimes they're very minor, doesn't affect anything with your credit report, like a previous address or something like that. But it is important for you to be able to review. So you do have access to your credit report through annualcreditreport.com. It's free. There's a couple of different ways that people will tell you to do it. In the beginning, if it's the first time ever looking at your credit, because there's 3 credit bureaus, Experian, Equifax, and TransUnion. Okay. Yep. So I would recommend that you pull all 3 of them through annualcreditreport.com.
How come? I'm just curious. Why all 3 of them? Oh, well, no, I understand, but why all 3 of them?
Because you could have one credit bureau that has an error and the other 2 that are not. But we do what's called a tri-merge credit report. So if you have something that's showing as a serious delinquency on one of the credit bureaus, it could affect what you're seeing for qualification. So it's very, very important because we use all 3 of the credit bureaus in a mortgage. Okay. So there's the other piece to that is too, what happens if you're an authorized user on a credit card of maybe even X or something, and that person decided to no longer pay that on time and you didn't know because you're not the one receiving the bills. Oh, yeah. Guess what? That's on your credit.
Yeah, yep. Especially anybody in a estranged situation where you co-signed on a card or something like that, or maybe
we've seen it.
Okay, yep. Yeah, that makes sense to me.
One of my other big things that I tell people for this, do not pay for the service. They try to get you in the credit bureaus, and I'm sure if any of them are watching this right now, they're not going to like that, but do not pay for the service. The credit scores, like we talked about, you can get them free through a lot of the times your bank, your credit union, your credit card, whatever. Do not pay for the services. Do the free monitoring. That's great. You can lock credit report down that way if you needed to, if there was fraud. But yes, that is my recommendation, is to view in each of the credit bureaus, all 3 of them.
So that was a ton of information. So I'm going to slow it down just a little bit for a second. So annualcreditreport.com. So all one word, annualcreditreport.com. Right. You can pull from Experian, TransUnion, and Equifax, right?
Correct.
Okay. And you want all three of them because you're looking for potential, like, what the heck is this, right? Or delinquencies that you didn't know was there. Maybe you're having some troubles where your credit score isn't raising even though you're doing all the right things, and you don't know why. Well, there's how to find out, and you could probably help them.
Yes.
Okay,
yeah.
so let's, just for fun, as long as we're on this subject.
Sure.
You find something wrong on your credit, or you're struggling. So one of the things that's on my paper here is to, like, what are we shooting for credit score?
For credit score.
You know,
Okay.
like what to actually get a decent mortgage right now that isn't like 9% or something stupid. What are you looking for, and then how can you improve?
Okay, so you technically can get a mortgage with a 580 credit score. Your terms are not going to be pretty. You typically will need to you will have a higher interest rate, things like that.
Define higher interest rate. So let's talk about what the difference
and closing
is.
costs. Yep. So so say that the standard mortgage rate right now is 6.875.
Okay.
There's a good chance that you're going to end up with a rate that's more like 7.5. If there is a loan, yeah. So, and also closing costs are higher. So what they charge you is called loan level price adjustments. So at the end of so you know when you have a car loan and you pay a higher rate because your credit score, it's risk-based lending, mortgages are very much the same thing.
Okay.
And another misnomer is on a consumer loan, if you apply with the person with an A+ credit and the person with a not great credit second, and that's the second person, you usually get the rate based on the first person. That doesn't happen in mortgages.
Sorry, I don't understand. So let's, we're gonna. I'm not sure I understood what you just said. Say that again.
All right, you have a consumer loan.
Consumer loan.
Car loan.
Car loan. I got a car loan. Yep.
I have a 800 credit score.
Yep.
The other person buying with me has a 500 credit score.
Oh, so it's a co-loan. A co-loan. Okay.
Right. So there's two people on the loan.
Okay.
So the first person on the loan is the one that typically gets the rate, right? So whoever has the higher credit score on a mortgage, that person has a 700 credit score, and the other person has a 580 credit score. They're going by the 580.
Really? No
there
kidding.
There is
it's the
no
opposite.
blending. There's no merging.
Oh, no kidding. No kidding.
Yeah.
So if you're married, for example, and one is doing better than the other, it's by the lowest one.
Correct.
Fascinating. Okay.
Yep. And it's the middle of the three scores. So if you get someone that has a 750, 740, 730, you're going to use a 740 credit score. The middle of the three scores. And I've seen them range where I've seen someone have a...
Oh, you mean the middle of like Equifax, TransUnion?
Correct. The middle of
the middle of the three big...
Yep.
Okay, I got it.
Yep.
Okay.
Yep. So they don't average them. They literally, and I've seen it range from someone having three credit bureaus where one is 620, one is 630, and then the other is 700. So they're gonna go by that 630 even though one of the scores is a 700.
I wasn't planning on this being like a credit counseling video, but it might be a little bit, and we might not get all the way through to. What the heck? We can make a lot more videos, so that's okay.
Yeah.
So that being said, in order to get close to the best possible rate, what are we looking at doing?
I personally feel like at least a 680 to get you into conventional financing.
Okay.
But FHA, you could have a 640 credit score and still be able to get a loan.
Okay.
So you could do it at the 620.
But would I be getting anywhere near those rates? That's to get a decent rate.
To get a decent rate for like an FHA mortgage, I would say probably a 660 credit score. It's kind of getting you in there. 640 is going to happen as well.
Okay.
But obviously, the better the rate, the better the terms. And that's the biggest thing to really look at.
Is there a point of diminishing returns on your credit score? And here's what I mean by that. So if you have a 750 and an 800, or if you could, like, does it matter significantly if you're at 690? So this is probably really important for some people. Like, does it? Are you going to save yourself a ton of money to have perfect credit, or is 720 sufficient? I mean, what is that?
The way that some of it depends on how much you're putting down, but yes, if you have a 680 credit score versus a 720 credit score, there is a significant difference between the two. That 40-point swing does make a difference.
How much money are we talking per month? Like just theoretically, like what are we talking about?
Per month, you might be talking $50 a month, so not huge money.
But that's over 30 years.
Correct. But what's going to end up costing you is is going to be closing costs in some situations.
Okay.
So
Okay.
Fannie and Freddie charge what's called loan level price adjustments. They can call it anything they want. They're points.
Points.
They're-
Okay.
so-
Loan level price adjustments are points, boys and girls.
Correct.
Okay.
So points mean if your loan amount is $300,000 and you need to pay 1 point, that's $3,000.
Yeah, 3,000. Okay.
So people
1
think,
percentage
oh, if it's a point, it's going to bring my
Okay.
rate down a point. No. It's what they're charging you in closing costs. So,
Okay.
but what happens in those loan level price adjustments? They have this chart and it's broken down. You can actually Google it and look it up online. Fannie, Freddie, loan level price adjustments, and you'll look at the tiers, and it will say, 97% loan to value and a 620 credit score, and it will show you what they're charging you extra in points. So you can actually see. So the more you put down, and the higher the score.
Yeah, keep going.
Lower the points. Yeah.
Okay, so I want to hear that one more time.
Absolutely.
Okay, seriously. So where can you go? Where can we go to see what that is?
I would Google it. Make
Google
sure Fannie loan level price adjustments.
Fannie loan level price
And it's
adjustments.
FANNIE Fannie.
Fannie loan
it's
level
Fannie
price
Mae.
adjustments. Okay, that's interesting.
Yeah,
All
so
right.
it's something that you'd be able. It just as a resource.
Okay.
It's not dollar for dollar. Are there programs out there that waive some of them? Yes. Home Ready and Home Possible loan programs, which are meant for first-time home buyers. Well, they're meant for first-time home buyers or buyers that have less than 80% median income.
Okay.
So in Worcester County, that's about $88,000 or so.
Okay.
So that's something that you'd be able to see that it's actually waived in that situation. But if you make more than that and you're not a first-time home buyer, you're gonna get hit with those loan level price adjustments.
Wow. Okay.
A lot of information all at once.
It is right. So it's funny. So this is the interesting part about what we do. Like when you really take a deep dive into some even so I was hoping to talk about just checking your credit score, how to improve your credit score, how to get pre-approved, and then gathering the required documents. I mean, there's literally
that part's quicker.
Yeah, completing your mortgage application, underwriting and approval and closing. Turns out perhaps I overshot a little bit with the idea of what was going to be on this video, and we can make a few more. But
I think the homework up front is so much more important because the rest of the stuff just kind of falls in place.
Okay.
So once you've done your homework, listen, there's opportunities to take first-time homebuyer classes online for free.
Okay.
Fannie Mae offers them. Freddie Mac offers them. They're free. And they're great to have because some of the programs require them anyways. They give you a certificate at the end. Some of the information is fantastic. Some of the information, you probably shouldn't be buying a toaster. But at the end of the day, it's very important to have. I think.
Can you finance a toaster now? I'm sorry, I'm just asking. I kind of
Bluetooth probably, yeah.
Print 4 easy installments.
That's right.
Sorry, I digress. Go
Yeah.
on.
So I think once you get that information in hand, at least when you're calling the loan officer, you're having an educated conversation and having a better understanding of why it's important for these things to happen.
Yes.
Because your credit is very important, but that's not the only thing that they're looking at when you're doing a pre-approval. It's a very, very important piece of it, but the rest of the items that we require are very important. So your next step, say that you look at your credit report, everything looks fantastic, you're ready to apply.
Okay.
I have an online application that I have people fill out.
Okay.
I personally start everything with a soft credit pull, which means I have the information, but I did not do a hard inquiry on your credit, so it didn't affect your credit score.
I get asked that question all the time. If I get a pre-approval, am I going to get dinged? Is it going to lower my credit score? So no is the answer to that question in this instance.
This instance, correct.
Yeah, just to get an idea.
Depending on where you are in the process, you do need to have a hard credit pull. You don't want someone running around with a soft credit pull because then if I go do a hard credit pull later on and something changes, we got a problem.
Okay, gotcha. Okay.
But with that being said, with a soft credit pull, I have a general idea of what your credit scores look like. I know what your debts are, which help me calculate your debt to income.
Okay.
And then I have maybe some suggestions if you're earlier in the process. Be like, hey, you might want to pay this credit card down if you can because you have some excess cash.
Okay.
Buy a little bit of money, raise your credit score, get better terms.
Now, by default, we're starting to get into what can you do to improve your situation, right?
Yep.
In real time, and probably fast and bulleted ways to do so.
Yeah.
Not like over.
Sometimes.
Sometimes.
Sometimes we need a little bit more time and a little bit more work, but I'm willing to do that with people.
And so, okay, me too, right? So this is where it's super important, and where going back to the basics of understanding what you can afford and or how to improve what you can afford, because you still make the same static amount of money, but if your credit score is better,
right,
you can technically afford more, right?
Correct.
So some of the I'm going to back up just a little bit here in that, so we're going to annualcreditreport.com, and then we're going to pull all 3 of our reports, which now I'm going to throw just one little extra thing in.
Yep.
If you are starting to think about it, right? You can pull a credit report from Experian or TransUnion or Equifax once a year for free, right? So what I do to monitor my credit is I pull one every 4 months.
Yep.
So I'm always pulling one every 4 months. Now I'm in the monitoring phase. I'm not in the I want to go buy something phase.
Right.
But if you're starting to think, if you're watching this video and you're thinking I want to buy in 3 years, maybe you just want to pull one every 4 months, right? But anyway, sorry. So
that's great advice, though.
Oh, thank you. So you've pulled that. I just totally threw myself off.
I think you were going to ask me what I was going to ask for paperwork, right?
That that is what I was going to ask. Okay, so we talked about this before before we went on camera,
Yep.
And people are surprised by what you need, right? And what was it exactly that you said?
Oh, you wouldn't lend somebody you don't know without lend them money without verifying information first. It goes the same thing for us as lending. In lending, we want to make sure that you have the income to be able to pay us back. You have the credit to show that you have a history of paying things back. But we also want to make sure that we're not putting you in a position where now you are, financially in trouble in the long run. So that's important.
Yes.
And also we want to make sure that you're not robbing Paul to pay Peter either. So there's a lot of things.
How would define how that would show up?
So you cannot borrow down payment money. You cannot take an unsecured loan to be able to borrow money for down payment. It has to be secured.
Oh, and that's like vetting. I don't want to.
Yeah.
It has to I want to say cure or something like that. That's not the right way to put it.
Seasoned.
But like seasoned. That's it. Seasoned. Right. Okay. So you have to have seasoned funds in an account.
Correct.
Not it just shows up out of nowhere from a gift from Aunt Susie. Right.
Right. Or,
okay.
Yeah. Cash. That's a big one. And listen, my family in the past were not originally from this country. I mean, they hid money in their freezer and other places.
Yeah.
So I think
which might be a good idea right now, just for reference. But
there's a lot of people that I think are in situations where they feel more comfortable having the cash in hand. That creates a problem. You got to ask the questions about how do you, are you going to deposit the money? Are you going to put the money in your account and know that you have to wait 60 days before you purchase something? Things like that. So those are very important conversations to be had. The other thing, so for paperwork, when we start going through that process,
what paperwork do we need?
Okay.
So you're going to need a W-2, obviously.
For the last 2 years.
W-2 for the last 2 years, right?
So like right now, we do 23 and 24 because we're in 25.
Okay.
They want 30 days of pay stubs.
30 days.
The biggest thing that you need to know is that you need to have the year-to-date income listed on that pay stub, because one of the big things that we look at is trended income, like your trended data, right? So if you're saying that you're making $20 an hour at 40 hours, but all of a sudden your year-to-date income doesn't match that, we're going
overtime.
Right. We're gonna ask questions like why are you not making the money that it says you should be making at 40 hours a week?
Okay.
Were you out on leave? Did something happen?
Oh, okay.
Are you not getting consistent 40 hours? Because that's something that we have to look at.
Sense.
So we have to look at, there's a lot of averaging of income if you're hourly. If you're salary, it's a little bit different.
Okay.
You make the money no matter what. If you're self-employed, 2 years of tax returns. There is some leeway and some of that of when we need the 2 years if you've been in business for more than 5 years, but as default 2 years.
Okay.
If you haven't been self-employed for 2 years, but you went from maybe you worked you were a plumber in a company and then now you're on your own.
Oh yeah.
Yeah. There is also some flexibility with that. That's another conversation depending on your circumstances.
Okay.
But rule of thumb, 2 years of W-2s and then 2 years of tax returns. And I don't know why. I have a lot of people that will send me their tax returns instead of their W-2s. Know that they are different forms. So
Okay.
the W-2s from the employer, the tax returns are what you send to the IRS.
Okay.
And they love to take your money, but
Okay.
The next thing is that what we're looking for is if you're, so for some of our self-employed people, if you do have overtime, if you can get your last pay stub from the previous year, because it breaks out all of your income, straight time, overtime, double time.
Oh, yeah, that
bonus.
would make sense. That would make sense.
That's super helpful for us as a lender because then we can actually verify that income easier. It's something that I ask quite often.
Okay.
And that's, as far as income is concerned, that's typically what we ask.
Okay.
Now, if you're retired and you're getting a pension, your award letters, if you're on pension, whatever that pension statement looks like.
Okay.
So we just need to document the frequency and how much the income is.
Okay.
That's the big part. The next thing is assets. So 2 months of bank statements is typically what we need.
Okay.
And full bank statements. Please don't send me screenshots of your online banking.
Do people really do that?
All the time.
They just take a picture
All
of
the
it?
time. They screenshot their picture of their thing, and I'm like, I can't use this.
So you need something official from the bank that says, okay, that makes a lot of sense. I can see where that would.
Well, and
I'm sorry, go ahead.
No, I think people think about it like I mean, I look at my online banking all the time.
Yeah.
I'm tracking my money that way too, but.
How do you get that though? Do you have to reach out to your bank and then they send you a PDF or something like that?
You know what it is? Most people have e-statements. You don't even know you have e-statements because it just goes in your email and you don't do anything with it. You can log into the online banking,
that makes sense.
Your most recent statement.
Okay, yeah, that makes a lot of sense.
If there's recent money, you can always go to the bank and ask for a transaction history. But typically, you can even go online and print it through your online banking. But most of the apps, there's nothing in those apps that really are verifiable as far as what we can use for income.
Okay.
For assets. Also, if you have 401k or investment account, same thing, most recent statement.
Okay.
If we're using it as part of the transaction.
Okay.
There's a lot of times I'll tell people that give me the information doesn't necessarily mean I'm going to use it, but it's good to know if we are in a pinch or something comes up. Or we have reserves.
So like a reserve account where if you get if I'm not wrong, and correct me if I'm wrong here. Basically, the bank wants to make 100% sure that if for some reason you get into trouble, you at least have something, or you can pull somewhere, or you are able. You're actually more credit worthy if you've got some good savings or good 401k, right?
So with your 401k, another little thing that you'll hear us ask for is terms and conditions of your withdrawal. They want to prove that if you are in a financial hardship that you can't pull the money out of the account because there are some you can't. Yeah. So that's important.
Okay.
And if you're thinking about using some of your 401k for down payment, we can have a whole other video about that. Not a huge fan.
Okay.
If you're taking out a loan to borrow and pay yourself back, it's a little bit different. But at the end of the day, I like to tell people to keep their 401k in there. But if you're planning on doing that, call ahead of time to verify how much you actually have, because people will say to me, oh, I have $100,000 in there, I'm going to use the whole thing. After you taxes and penalties and all of that, that's not happening.
No.
So just to be very clear. And some of the other stuff, if your credit isn't super strong, alternative credit, your rent history, proof of 12 months of rent is super helpful for us.
Does that still work with utilities too?
It does work with utilities, but the only thing, the rent history is probably the more important piece
that makes
of it,
sense.
because that consistently shows that you can make the rent payments, which makes you more likely to make the mortgage payments and things like that. So, but that's not for everybody. But if you're a little bit lighter on the credit, or maybe your credit score is a little bit iffy, that might be a nice strong way to kind of present you as a borrower. So that's important.
So believe it or not, we're actually running out of space on the SD card right now, which is good. We've been talking for quite a while. So this really turned into a fascinating and really useful conversation. So I do want to recap really quickly. And we're not done here. We're going to have to be continued, so to speak. So annualcreditreport.com, pull Equifax, TransUnion, and Experian, right? Okay. all at the same time look for, so we're looking for...
Any errors, authorized users that you don't think you should be on there.
Right,
and
okay.
Address errors, anything that is not accurate you want to have updated.
Okay, and then you want to take a good look at your credit score and understand that the lowest of whoever's applying.
Yep.
Whoever's applying is the one that is going to be based on. We can go to Fannie Mae.
So Fannie, Google Fannie loan level price adjustments.
Okay. To try to get a feel for what it would be like and what your payments are going to look like and what you might have to pay for loan level adjustments. Hence points. And then as far as documentation, we're going to need W-2s. We're going to need bank statements. We're going to need
tax returns.
Tax returns for pay stubs. What else?
That's the lion's share. Yeah.
And then sometimes 401k statements and whatever other assets that you might have. Yeah. I think that's a really good start to get to where we want to go, which is pre-approved, right? To really understand what you can afford. It's always good to look at these things anyway, just so you really understand where you are in the world financially. I mean,
exactly.
And Brie and I are looking to help you understand those things so that you can make healthy decisions, right?
Absolutely.
You know, we want to help you get into a house that you can afford and you can love and you can be there for a long time.
Very important.
Comfortably.
Yeah.
What else? What have I missed? Is there anything that's like sticking out in your mind right now that you think, just based on credit score and based on starting the pre-approval process, that I'm missing?
Credit, debt to income, and obviously if you have interesting employment history, have that conversation. You want to try to have at least 2-year job history. It doesn't have to be the same employment, just that's another thing that's a little misnomer.
Same, like healthcare, right? It doesn't have to be the same job, but
but if you say that you're making more money at place B or better hours or whatever that is, that's okay.
So as always, if you have more questions regarding this, please reach out to us. Brie, you can reach at...
My cell phone number is 978-852-6376, and my email is bkelley, Kelley, at Annie, ANNIE-MAC.com.
And it'll be underneath the video. And I'm Tom Blake, and you can reach me at 508-951-2803. And also Tom at homesjustforyou.com, all one word, homesjustforyou.com, Tom at homesjustforyou. Should we leave it there?
Yeah, sounds great.
All right, well, we'll leave it there, and we will see you again next month.
Sounds good.
Bye now.
Bye.